Okay, everyone, and welcome back to the Morning Edge. And let's go and get back in the charts. So let's go and move into the Kiwi. Okay, we talked about this on Friday. We talked about this being resistance here. We'll take a look at our chart here. Well, we have the 73 up here, but we were talking about this potential head and shoulders here. So we had the 3 as the resistance, but we talked about the head and shoulders, the potential for this, and that it would be invalidate this, and it's not head and shoulders yet, but it would invalidate the formation of this head and shoulders if we got a 2-hour close above 72.75. It looks like it held it in place. We had actually been looking at this for a couple of days and said, hey, we might have a head and shoulders there. And we think that we could make this move down here. Yeah, obviously, here's the resistance here, it's just 73. But for the head and shoulders, for the potential there, we said we can't get a 2-hour close above 72.75. We didn't. We're starting to push lower. If we can break past this 72.25, which is the bias pivot, that'll open the door for the extension here, which comes in, I think it's like 72.30. Right now it's hanging around up here, but it certainly looks like it can weaken lower. But it needs to start to break lower. It can't be coming up here again and hanging around here. It needs to start breaking lower and moving to that 72.25 and actually getting below it here. And that's on the Kiwi. So overall, nothing's changed. Resistance is 73. 72 is going to be the support. We'll go back in here. Right there is going to be a short-term support, but we're looking for 70. If this is going to play out, we're looking for 71.30. So we're clipping along. Let's go and move into the dollar CAD. This one's kind of been unusual and kind of been all over the place. We did mention 31.90 and 30.32. Looks like we got almost down to 30.32. Actually, yeah, just about hit it. So. Well, that's our little support area, so it did hit into that, but we were looking for 30.32, which was down here. So it's very oversold. It looks like it wants to go higher. I don't think this band really means anything at this point now anymore, because it's already been tested so many times. I mean, it's pulling back a little bit, so we're going to get rid of that. There's some resistance here, which is, well, that's where it's our 31.90, 31.91, so just mark this off. Get rid of this too. Yeah, that's still going to sit here, this 31.91. This thing is just kind of forming along. I don't have a real good feel for what it does. I mean, we can look at a fib. It looks like it may want to eventually get to 32.18. Obviously, if the Fed raises, we can really start to power back up. For right now, It's a 50%. Right offhand, I really don't see anything that I feel good about this. The only thing would be is we came up here to 33.10. That's about it. I really don't see anything here. We'll keep support at 30.32. We'll keep resistance at 31.91 because if we get up there, I'm thinking if we get there today, you'll see a little bit of a pause. But I think it's going to maintain still a bit of upside. So this is going to still remain the same. If you notice that most of the stuff has remained all the same. Jack says he got here late. No apologies necessary. For Jack's sake, real quick, we'll just point out that we're looking for 605. We've been looking for 605 since last Friday. We made a run down here to 630. We said we'd get some support around the 624. Looks like they only made the 629. But our overall target of 605 confluencing with the 609 was just 38%. So nothing's changed on the euro. Stayed the same. Here was our resistance from Friday. So let's go and move into the dollar Swiss. That's been an interesting one. And we're starting to see a nice little bounce in the dollar Swiss here. So it's been stuck in a very, very tight little range. And we're looking at 99.30, par 61. Here's the 99.30s below here, and here's par 61. What we pointed out in this little oval was how we're just stuck in this range. So it looks like it's starting to pick itself up off that range. 99.46 is a 50%. We're going to stay with what we had, which is the 99.30 here and par 61. So yeah, really, I mean, we've had, move here in the euro, but everything else is pretty quiet. So, right here, 99.30, par 61. Doesn't mean we won't go lower. I mean, as we get closer to, where is this? As we get closer to FOMC and the possibility the Fed could do something, it should, we'll probably be going back to this bias pivot of 120. But for now, we're going to still stay with what we had Friday, which was this par 61. Try to clean this up a bit. So until then, we'll just leave it the same, 99.30, par 61. I mean, if we start to work higher, this is that bias pivot, but we're just going to stick. I mean, I don't see them making a gigantic move today, so really any moves to par 61, they'll probably lace them off a little bit, but I think we're starting to work higher, and it's going to be up in here, but we'll worry about that tomorrow. So we're going to keep this the same too, 99.30, par 61, still bearish. So let's look at the dollar yen. We had this 14.25, 15.74. We're talking about, how this market can go and move higher. Let me just go in and save this. I like to save that work in case something happens. Something seems to always be happening when I'm doing some analysis and all the charts disappear or something. So don't need to do all that work and then have it not saved up. So once again, like I said, we'll try and get that taken care of. Let's see. So let's take a look where we stand here on the dollar yen. Here. So we got that run up in here, and we were talking about 1574. We didn't come that anywhere near close to that. I mean, we weren't that far off, but we got to 1540. So I think we have. Let's see, what do we have support? Was it 1425? Yeah, 1425. And we said that if the Fed does raise rates, I think we'll make it appear to 1631. I really do. If we start, we'll have to see how things start to develop. I mean, I thought we might make it appear and we'd start to continue to work higher, and we just have it, at this point. So we're pulling back a little bit, easing back. And part of that is because we read the news story and this bit with the travel ban, and so getting a move into safe haven currency, and that's the yen. So that's why you kind of saw this thing already start to leak out on the defensive. But if they do raise rates, we're going to come into this area here. For right now, I'm going to keep it the same. We had 1425 as support. How do you like that? 1426. We bounced off of 1426. So we're up over 40 pips off of that support. Pretty doggone good. For now, the support would come in on these touches here. See all those touches? 1394. It's a ways off, but we're going to use that as support. So we're going to move this up here. Yeah, 1394. So we use that for support. We'll update that. I mean, the support today was, I was off by 1 pip. But I'm going to move this down lower. So we'll go 1394. We'll keep the resistance here at 1574. We can see it's still a range. And we'll move into the cash dollar index. Pedro says, do you really think the Fed will raise rates? I think there's a decent chance it will. The data came in weaker. I mean, the way they've been playing things out, they would raise rates. The only thing is, I guess it'll probably tick Trump off if they do. So they may wait till the next meeting. But the last time that the data's been strong overall with just last Friday's data coming in a little bit weaker. One week's data is not going to impact the Fed, and they've already been saying they want to stay ahead of the curve. So they may just go on to do that. And I think because of that, the issues with the data that came in a little bit weaker, that might have an idea of trying to hold them off a little bit. But I think they want to raise. They want to raise, and I think they'd rather err on the side of caution. So I think that it probably lessens the chance since Friday, but only a little bit. But to me, it just seems like make more sense for them to raise. But it's going to be a little bit volatile. I think one of the guys earlier was saying, hey, it's going to be volatile. Richard says, good morning all. My question for today regards the cash dollar index. Does the dollar index, he wants to go, hang on 1 second. Gwen was making something, but hold on. Does the dollar, I missed this question. I'm backing up to get distracted. Does the dollar index move the currency pairs, or do the currency pairs move the dollar index? Since the euro dollar is almost a mirror, it's really hard to tell. That's a great question, and we're actually getting to the cash dollar. So that's perfect timing where that played out. So hang on, let's get to the cash dollar index. Well, the cash dollar index is made of, I think it's 6 different pairs, I believe it is. But anyway, I know that the euro comprises 56% of the cash dollar index. So quite often it trades inversely with the euro, which is one of the reasons I really don't pay that much attention to the cash dollar index, although most people, do. What I do is, it's traded inversely to the euro, so what the heck do I need to look at that for? But there are other pairs. But what I do is I'll look at the dollar Swiss. But we've got some issues with the dollar Swiss, with the Swissy, that kind of don't give it that good heads up that it used to. The dollar index is good. The way I would look at the dollar index, most people look at it differently. Some people just straight up trade the cash dollar. It's a good way to look at if you're saying, am I seeing strength across the board? Is it being, is a certain other move kind of being corroborated? But once again, like I said, the euro comprises 56%, so it's almost traded inversely. But no, it's not the cash dollar index that moves it. It's because it comprises, I think it's 6 different currency pairs, majors, and then each one is weighted. As I mentioned, the euro is 56%. I think after that, I think it might be the Canadian dollar. I have to look at it. Of course, the Japanese yen's there, the pound, the Aussie dollar is. But no, it's going to reflect what the pairs are doing. So it's not. It's just a composite, of those pairs. But it's weighted, so obviously it's putting more weight into the euro. But no, it's not the tail wagging the dog. But it's a good question. So let's see where we are. Looks like we've kind of broken a trend line here. Although I saw that in the euro, but it didn't seem as pronounced in the euro. But we can take a look at it here. Looks like we have a little bit of a trend line here. You see that here? Looks like we're starting to break it. I don't use too many trend lines. I usually, I'll try and reserve them when I think I see something important turning. I think we had that on the dollar chron, if I remember correctly. We'll look at it. I think I still have it there. So you can see it looks like we're breaking out of this trend line, just a little bit. Here's our resistance from Friday, 017.5. I'm going to go and leave that there's resistance, and let's see where we had support. We had it at par 24. And the low was par 17. So I was off by 7 pips. Which kind of plays into the euro, because euro, remember, I was looking for 732 and the high on Sunday was 740, so that's 8 pips. That's to say they move kind of close to similar. But anyway, so we were looking for par 24, we got par 17, and on here, we're looking for 101.07, and I'm going to stay with that. Nothing's going to change on that. So, pretty an easy analysis today, because most of it is just basically what we had on Friday, which has actually come very close to catching some highs and lows, depending on what you're looking at the time. Which, obviously, we were looking for the euro to go lower, so these two trade inversely, so obviously the cash dollar would be looking for that to go higher. So let's move into the dollar peso. Okay, Gwen had an article. Maybe read this on your next break. I saw this and thought it's interesting. This will affect things, won't it? I am new to understand the consequences. Didn't see anything in it about the U.S. Is this a reliable Asian news source? Asia.nikkei.com. I don't see it right now, but that there's a one that does put out called Nikkei News or something like that, which is okay. But I haven't seen. I don't know. I haven't looked at the story, so I'm not sure what you're looking at. Okay, Jack provided the weighting. Jack says it's 57.6%. This is a cash dollar index. 57.6% euro, 13.6% Japanese yen, 11.9% pound, 9% Canadian dollar, 4.2% Swedish krona, and the Swiss franc is 3.6%. So that was a breakdown provided by Jack on the cash dollar index. We are clipping along here in the cash dollar. Remember, our resistance is 101.07, and we made it up to essentially 101, 100.994. So far off 7 ticks. On the resistance for that, but that's our resistance there. So kind of clipping along. So let's go and take a look at the dollar peso. Dollar peso, 2094, 2130. And this thing is continuing to fall down here. It did get up to almost to our support, our resistance here. You see that 2140? We had 2130. So it actually got above it and we pulled back. This was a real weird pair at the moment. So our resistance was at 2030. We got to 2038. There's off 8 pips there, but these are big moves in the peso. So it's come back down. I think we had support. What was it? This 2094. Yeah. Okay. So it's getting past that, and because now I think people feel like, at least with the stuff with between Trump and Mexico, that the worst is over. So you're probably going to gently start to see this pair come in. So for right now, we're going to put the support here at 2071 with resistance at, on a very short term basis, we're going to mark this resistance here. Right there. Let me get rid of this. So let's take a look at that. That's going to be 2106.5, basically 2107. We'll mark it 2106.4, just for the sake of whatever. So we'll mark it as 21. And this is going to be 2071. Oh, it's already time for break. So we'll be back in just a few minutes. Thanks for joining us on the Morning Edge, and I'll adjust this to what we've finished so far.